Welcome to the Bitcoin channel, Bitcoin Today in English on Friday. I hope you guys had a good week. For the Bitcoin in the last 3 weeks, it was good. We will have a close look later in all to the data, but we have something very special today. We want to have a close look into the Bitcoin mining industry, which is absolutely essential, as you know, for the Bitcoin network. We'll have a close look. So make sure, stay tuned up until the end. It's really interesting. And beside this, if you like the content, subscribe the channel, give us a thumb up. Great, we love that. So I would say, let's start like always with the overall market. S&P 500 heat map, green. Now this is because of last night, you know, there was this meeting and Jerome Powell was talking, and it was quite hawkish what he said. So, well, he more or less said, well, there could be a further increase in rate hikes. Well, nobody believes it. But as you can see, the market reacted to it. And also the bond yields react over 5% for 2 years, 4.6 for 10 years. So last night, Far East was deep red, Hong Kong, Japan, and China. Quick look to the correlation between gold and US dollar. Well, we have this situation for quite a while. There's still a lot of fear in the market, and this is why dollar is very strong and gold is very strong. So let's have a quick look. Rate hike expectation related to what Jerome Powell last night said. Well, 85% of the market believe no. There will be no further increase. What is important, we have to have a look today on the balance sheet from the Fed. And we opened here a big chart and back to 2008. And what you can see here, we had this huge increase in money supply. And since about 12 months, they take a lot of liquidity out of the market. So this is something very hard to believe that they can carry on with this, because this puts a lot of pressure on the United States debt situation, plus the high interest rates. But they do it in the moment. So another thing we have to check now is the sentiment. Fear and greed from CNN is in the fear zone on 41. And here we have something new. It's the AAII members. It's basically the retail sentiment. This is really very interesting. And as you can see, we have a huge change. This is on a weekly base. We had a downtrend, and now you can see 42% is bullish, and only 27% is bearish, 30% is neutral. And this is a very good pre-indicator for the whole market, and certainly also for the Bitcoin. And here we have something else. It's the NAAIM exposure index. This is basically the major index from institutional investors. And as you can see, we had a downtrend here, and now we're coming back into the market. You have to understand, a lot of money is sitting on the sideline. They sold all the bonds. They dropped by about 50%. This is why the rates went up. Also, they sold a lot of shares. So there's a lot of liquidity sitting on the sideline. And this looks like this liquidity, maybe by the end of the year, is coming back into the market. And here we come to a Bitcoin. As we make the video, 37,160, so over 37. I opened the candles on a weekly base, as you can see where we come from. And what is very important, this is the 4th week on a weekly base that we have a green candle. So if we close today green, it would be the 4th week increase. This is really, really very bullish. And this reflects also the market capitalization. We jumped this week from 12 to 11. So we just swapped places with Tesla with 724 billion. Really, really very strong. Halving clock, 160 days, April 16. And here we come to our topic today. Marathon Digital sees 670% revenue gain in Q3 as Bitcoin production surges. So what does that mean? I mean, Marathon is one of the two big mines. It's Marathon and Riot. And so we make a lot of money, and they're really very profitable. We later will go in great detail in all the facts. And this is why today we really will have a close look to this question: what is better, to invest in to the Bitcoin or to invest in shares of the mines? And as you guys know, we developed long ago a mining index. We will have a look today into this. And so really something very, very important. And for this reason, first of all, we check the spot ETF approval timeline, because this is also very much related to the success of the mines. There's no change. There are rumors in the moment that maybe in the upcoming week a decision could be made, but this is rumors. Anyway, by January 10, we have to make a decision. Fear and greed, overall market, 70%, very bullish. Our Bitcoin fear and greed index is on even 80%, so very, very bullish. We quickly check the heat map, the overall heat map. It's a mixed picture. Dominance from Bitcoin still over 52%. What is important is the open interest, and this is really going up. And something happened last night. For the first time, at least as long as I follow this market, which I do for quite a while, the CME, which is the Chicago Mercantile Exchange, which is the United States, is on place one and not Binance. This is really interesting. Why is this important? Because the CME in the United States is basically been used by institutional investors, not so much by retail like Binance is more used by retail investors. This is a very bullish sign that the increase of price brings all the institutional investors into the market. Really good. Liquidations, yeah. Last night, really, really bad on the short side. All in all, about $3 billion have been destroyed on the short side. This is what I always say. It's really dangerous in the moment to short the Bitcoin, but people still do. And when you look at the long-short ratio, it's still that the majority is sitting on the short side. So we can see further huge short squeezes. This could be another bullish thing for the price as well. On the other hand side, loaded addresses, which is the spot market, we are close to 50 million. We are increasing, really good. Balance on exchanges, no change. Roughly 2 million Bitcoins are only on the balance for trade. Very bullish for the whole market. So now we come to our topic of the day, looking into the mining industry and the mining situation. What is very important to know about mining is they have this problem with the hash rate, then they have a problem with the price, production cost. They have this huge competition, and it's a global business, but 38% is located in the United States. So this is something you have to know, and we start with the hash rate. So why is this important? The hash rate, we have here the chart from the last halving up until now, so more or less nearly 3.5 years. And what is very important to see is before the last bull run, the hash rate was over the Bitcoin price. This is the same situation we see today, hash rate higher than the Bitcoin price. When the bull run started, price went drastically over the hash rate, then the correction came and it went after. This is a very typical situation for the Bitcoin, well, for 15 years more or less, because Bitcoin is in the place for 15 years, so this is not new. But what is interesting to see is with the last halving, the hash rate was about 100, in average 150 extra hashes. Today it's 450, so it's tripled more or less. And this is a pre-indicator what will happen to the price, because the miners have to make money, and they have to be, the price has to be substantially over the hash rate. So this is a very, very bullish sign for an increase in price. And here we come to a production cost. It's the same picture. What you see here is that the last time production costs were slightly under the price, When price went up, production costs stayed more or less constant. So the mines, which is the greenfield, started to get really extremely profitable. And the shares went crazy. I mean, the shares went from like $2 here to like $50 here. This is what the leverage was. And today, when you look at this here, you see that price is going up, but production cost is staying around about $17,000 or $18,000. So they make about 100% profit already. So what now important is to have a look to this index. And what we have new here, I mean, when you look at the charts underneath, this we have for a long time. But what is new is this first chart. And this chart shows the red line is the share price from the top miners in the United States. And the blue line is the Bitcoin price. And what you can see here is back in history from the last halving, that the share price was above, then it went parallel, and then the shares went crazy. Two tops we had, and then the correction came. So you see a very, very strong correlation between share price evolution and Bitcoin price evolution. And also what you see here is now, which is today, that the price is constantly going up for Bitcoin, as we know, from about 15,000 up to now 37,000. But the mine, or the shares of the mines, are still not up. Now, why is this? Because the mines have to invest heavily now, so they have to use the profit and the cash they have into the halving, because they have to invest in hardware. This is what they have to do in order to stay competitive in terms of hash rate after the next halving, which will take place in April 18, as we know. So that means when we look on a picture here, what does that mean for the share price on the long run? The Bitcoin price made since the last halving about 327%, although we had the ups and downs, but the mines made 727. So roughly leverage is 2.23 over a period of, from the last halving, which was May 20 up until now. So this shows, when you raise the question, what do you want to do? Do you want to buy Bitcoin, or you want to buy shares from the mines? What we can say is maybe to do both is the most profitable thing you can do. If you're a risk investor, you just go on the mines, because this is probably the highest profit you can generate. If you're a bit scared about what's going on with this industry, maybe you split your investment into buying Bitcoin and yet at the same time buying the shares. But the highest profitable thing in the market definitely is investing into the mines. This is more or less the conclusion we can make. Okay, we carry on with the data. The aggregated trade volume, we had this peak, but we fell back into the red zone. Definitely we need more volume. We come now to our momentum indicators, and interesting is the middle graph, the MACD. This is the most important thing by predicting what the future will be, as far as it's possible, by the way. So what we have here now is for nearly 4 months we have green bars. We had this golden cross from the MACD to the upside. Why is this so important? When you go back in history, this is the start of a next bull run. This happens only here as the start of bull run, and then you have a death cross to the downside, which starts the correction, and then again up. So over a long period, for 3 years, only 3 times you have golden crosses, death crosses, and golden crosses. So this is a very, very valid pre-indicator what's gonna happen. Also, when you look at the RSI, 57%, we are not oversold or overbought. So it's a very, very healthy market. The same thing on a daily base. Short term looks a little bit different. Very, very bullish, absolutely bullish. MACD and Bollinger Bands, all great. But when you look at the RSI, we are an 82%, so we are really overbought. So there is a risk always when you see this that a correction could come. Yet, our short-term indicator says we could jump to 39,000 US dollar. Now we come to our prediction models, to the halving, the short-term models, and well, we are really proud on these models. I always have to say this. The delta is 6,500. The price is $6,500 higher than our prediction. So this model says by the halving about $41,000. Second model says about $44,000, more or less the same thing. Well, Wyckoff, we did a couple of updates because of what happened recently. And it's a momentum indicator. It's not a timing indicator. But this indicator is the most bullish indicator in the moment, which says around the halving or after, we could see $61,000. Fibonacci, really, really great. For the first time, we are in the 100% zone, which goes according with our average prediction of 42,000 to the halving. Really, really great increase. Another great thing is 50 to 200. We had the golden cross now from the downside to the upside. Again, I have to repeat myself. It's all bullish and bullish and bullish. On the other hand side, we have this model here for short-term traders. If you're a long-term investor, it's not important. But the price is above all the ribbons. So there's not much possibility of trading. Finally, we come to our logarithm regression model. We come to the end of a fourth cycle, as you can say. And it looks pretty much similar to all the cycles before we had, because Bitcoin moves in cycles all the time. I have to repeat this. All right, you guys, we had 3 good weeks. Everybody who is invested in the Bitcoin is quite happy, I guess. So I wish you all a great weekend. We are back on Tuesday in German. Have a good day. Bye-bye.